Hi everyone, I'm Matt from Looking to Bitcoin, and today we're going to be looking at whether whales are currently dumping their Bitcoin. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So for the past few months, you may have noticed, especially a few Look into Bitcoin metrics concerning whales and potentially their large Bitcoin holdings, may be showing signals that maybe whales are starting to sell their Bitcoin. And well, this kind of goes back a few months, really, especially if we look at the addresses holding at least 1,000 Bitcoin. We can see this has been on quite a general downtrend since around February or March 2022. So for around a year now, this has been on a fairly steady and consistent downtrend. What we can also look to is another metric that is almost giving us this anomalous reading that we've never really seen before, and this is the advanced NVT signal chart. Now, just to simply put, because this is a fairly complex chart, this is looking at the current transactional value, well, the 90-day transactional value of on-chain Bitcoin denominated in US dollars and comparing that to a longer term yearly average. So we can see if there's been a large increase in on-chain activity over the previous few months compared to the yearly average. And once this spikes considerably to the upside, it indicates that a huge amount of valuable Bitcoin is being transferred on the network compared to what we have been seeing for the previous year. And as we can see here, this has given us over the past few months really this huge exponential run up to the upside, potentially indicating, along with the addresses holding at least 1,000 Bitcoin decreasing, that maybe whales are beginning to dump their Bitcoin. Maybe they're starting to lock in profits at the first sign of an upturn, and maybe this is going to lead to a negative, huge dump reaction in price. But is this really the case? Well, we have a few metrics that maybe don't align with this thought process. So if we first just go to the miner revenue in fees chart, this is showing us the amount of Bitcoin miners are earning every day in BTC. And what we can do is look at this to try and get a general idea, because the higher the fees are being paid, generally the more Bitcoin is being sent across the network. So if we actually just zoom in very recently over the past year or so, just down here on the miner revenue and fees, we can see that maybe for the first 6 months since the previous year, that this was hovering at around 10 to maybe 12, 13, 15 Bitcoin per day in miner revenue and fees, whereas the previous 6 months this has increased fairly noticeably to probably above 20 per day on average. So this is indicating that maybe there are more Bitcoin being sent on chain, as the fees increasing indicates that there's more transactional value going on the Bitcoin blockchain, or at least more transactions going through. Therefore, people are maybe willing to pay a larger fee to get their transaction prioritized. But in general, this just shows us that there's a greater degree of network activity, and it doesn't necessarily point towards this being whale activity. So what we can actually do is go on to a few other metrics to see if this actually concurs with the other information we have. So if we just go to blockchain.com, this has some more on-chain data that we don't necessarily provide on Looking to Bitcoin currently, such as the confirmed transactions per day. And this blue line here is just showing us the amount of Bitcoin transactions that are happening every single day and how that relates to price. And what we can do is actually smooth this out so we get a more easier to process data. So if we just average this out over 7 days, what we can see is the amount of transactions per day going through on the Bitcoin network over a 7-day average has absolutely skyrocketed. It has gone exponential, and this kind of lines up with what we were seeing in the miner revenue in terms of fees increasing exponentially, because just the more transactions that are going through, the more people are willing to pay to get their transactions through. So this may be driven due to fundamental events such as the FTX insolvency and lots of people taking self-custody of their Bitcoin, moving their crypto to their own hardware or software wallets. Therefore, it's a bit safer and there's no third-party risk of exchange collapse or anything like that. So that is obviously very good for the space, seeing a lot of transactional on-chain value. But what we can actually see is this large transactions? Does this necessarily relate to big players, whales, potentially moving their Bitcoin? Well, what we can do here is the estimated transactional value in USD. If we aggregate that and get the daily average again, and then just average that data over the past 7 days, we can see this hasn't really increased too substantially. According to this metric anyway, what we can see is the amount of transactional value in US dollar denominated terms has increased somewhat, but this is mainly just due to the price increase in Bitcoin. To me, this doesn't look like a substantial amount of whales taking profit or selling their Bitcoin to try and dump the price even lower. To me, this just looks like the general increase that we'd expect to see, along with a little bit of a price increase that we've seen in Bitcoin. Especially if we go over to the whale shadows chart, what we can see here is it does look like potentially there are some more Bitcoin being sold, by these larger players, especially if we isolate just those holding for at least 10 years. This whale shadows chart, just for those that don't know, are looking at transactions from whales that have been holding Bitcoin for an extended period of time, but only transactions of at least 100 Bitcoin, so fairly substantial market moves. And we can see that this has been showing that there are some more frequent whale transactions on chain, but still not necessarily very large transactions. We can see here that this doesn't look too out of the ordinary. And one thing you have to take note of is that those wallets that have been holding Bitcoin for at least 10 years haven't really existed until a couple of years ago, just because of how new Bitcoin is. So I think if we just remove that and isolate to maybe the 4 to 5 year holdings of Bitcoin, this may give us a better indication of whales that are trying to sell at the peaks and buy at the bottoms, those that can maybe time the market a little better. And as we can see, this doesn't, again, point to whales maybe dumping their coins too much. We can see that there's general trends to the upside as Bitcoin's price increases, such as when we get substantial bull markets, as we saw in the 2017-2018 bull market, and then more recently in the 2021-2022 bull market. But there's always a few of these transactions going on just because whales need to eat and pay for rent too. But we can see in bear markets, this usually trends to the downside. And if anything, to me, this looks like it's trending very much to the downside. So it'll be interesting to see over the next few weeks and months if this actually flattens out, such as the periods we've seen between bear cycles and bull cycles, this transitionary, more sideways price action period. If we get this sideways transaction period where there's not too many whales selling, especially these whales that have been holding for 4 to 5 years that are maybe a little bit more active in the market, to me, again, this doesn't really point to any selling. So why are we getting this addresses holding at least 1,000 BTC metric decreasing fairly noticeably? Well, if we actually look at the numbers involved here, we can see, as we discussed, from about a year ago, the total addresses holding at least 1,000 Bitcoin was around 2,300, maybe just under 2,200-ish. And right now it sits at around 2,000-ish. So this is about 300 wallets that used to hold about 1,000 Bitcoin, or at least 1,000 Bitcoin, that have now potentially sold or just transferred to different wallets. So why is this decrease so substantially? We need to look at this in tandem with the other addresses holding charts we have here on lookintobitcoin.com, such as the addresses with a balance of at least 10 BTC. We can see at almost the exact same time that the addresses holding 1,000 Bitcoin started to decrease fairly noticeably, the addresses holding at least 10 BTC has rather increased exponentially. We can see this has increased from about 145,000 to 155,000, a 10,000 increase. Now, obviously, that doesn't quite make up for the amount of wallets holding at least 1,000 that have been selling, but it can maybe make up for about half of those Bitcoin being transferred from wallets of around 1,000 Bitcoin to around 10 Bitcoin. But then if you then also take into account wallets holding at least 1 BTC and how they've increased exponentially also, from around 800, just over 800,000 a year ago to nearly 1 million wallets we see today. This is a huge amount of Bitcoin that's actually been scooped up by retail traders who've tried to take advantage of the discounted BTC. So again, we are maybe seeing whales selling their Bitcoin, but it doesn't look like they're potentially dumping their Bitcoin. If anything, they might be being smart, transferring their Bitcoin into smaller wallets so that they can segregate their holdings and potentially just reducing the risk of having all their Bitcoin situated in one wallet, which opens up doors for potentially losing it or whatever reasons there may be. But we can maybe see that they're either transferring it to smaller wallets or maybe they're selling rather slowly, because if we looked at the actual transactional value of the confirmed Bitcoin blocks coming through, it doesn't necessarily look like it's increasing too much. So maybe they're selling just a little bit here and there, but retail are more than scooping that up. So really, we are seeing a bit of an equilibrium in the amount of Bitcoin on the network. This isn't necessarily pointing towards a huge amount of whales dumping. If anything, it's pointing towards maybe whales splitting up their Bitcoin, retail accumulating their Bitcoin. But we also need to consider that a lot of these wallets holding at least 1,000 BTC might be exchanges, and a lot of exchanges as well, especially with the proof of reserves that are being implemented across many of the large exchanges, many exchanges that have gone bankrupt over the past year or so. This decrease in wallets holding 1,000 Bitcoin kind of makes sense, especially with the increasing cost to actually acquire so much Bitcoin compared to just a few years ago. So just to summarize, while the wallets containing at least 1,000 BTC have recently seen a prolonged decrease, we're seeing mixed metrics pointing towards this, indicating large holders or whales actually selling their BTC. We are seeing the NVT ratio spike exponentially, but this is likely just due to the price increase in Bitcoin and how few transactions we actually had in the year leading up to this, especially with the fundamental events such as the FTX collapse, prompting many traders and investors to move their coins to their own custodial holdings, and a lot of network activity following that. This generally doesn't seem like anything too much to worry about, just seems like a general anomaly driven by fundamental and generally just technical factors that we're seeing in the Bitcoin price. What we can also say is as this decrease has happened, it's been in tandem with the wallets containing a small amount of Bitcoin increasing substantially. So as this is happening, the whales are selling, retail are buying up. The demand for Bitcoin for smaller traders, well, not saying that 10 Bitcoin is a small amount of money, but comparably to 1,000 Bitcoin, these smaller wallets are absolutely scooping up as much Bitcoin as they can. So any that is being sold potentially by these whales are just being scooped up, and this is, if anything, driving price even higher. But we do need to consider that whales may just be separating their Bitcoin across multiple wallets like we discussed earlier, but we do have to acknowledge if this is genuinely whale selling, which we won't really know until potentially in hindsight or as it's actually occurring with the whale shadows chart, that this usually precedes a decrease in the Bitcoin price. So what we need to do is just potentially have some caution, maybe keep an eye and observe the current metrics we've discussed here to really see how this plays out over the coming weeks and months. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know if you're selling at these prices or are you just trying to scoop up as much Bitcoin as you can. Let me know in the comments down below and on social media. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.